Yeah.
Okay, where's your pen? It lost one.
In the box.
So I know we always do the same thing every year. This is not what we do very often. So you'll start the meeting and then, we do the flag salute and all that stuff, and you guys elect a budget officer. And then I have some stuff we can go over.
Okay.
Get started.
Who is the budget officer? A board member?
No, it could be any member. It could be any member of the committee too. So
Has anybody done it before?
it's basically somebody presides and replace. So you can do
Mark
it.
did it last year, right?
Yeah. So anybody can do it. And then it's just more of a figurehead to run the meeting for the budget committee.
We can have Rick do it this year.
Absolutely.
What?
Whatever we need.
on this?
No, Ricky,
Oh,
he's on the budget committee, so.
Oh.
I'll be that guy today.
Yeah.
I'll 6 o'clock. So
Okay.
Ira's online, correct?
Yes,
Is there an agenda to this thing?
Yep, right here.
there is. It's floating around. There's a bunch of copies where they all go.
Oh, I got the stack. I see. I thought it was part of the, yeah.
Take it with you. Right, can we get another down here?
Yeah. That's one to go with.
It should be
All right.
go around.
Oh, sorry. Okay.
Just so I can play it. Okay.
I'll share with the, there you go. I'll share it on. Okay, let's call the meeting to order. Go ahead. All right, guys, it's May 8th at 6 o'clock. We're this is the budget committee for Club River Fire and Rescue. Please stand and do the flag salute.
Pledge allegiance to the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Nice. Okay, so first up is the election of chair of the budget committee. I nominate Ricky.
I'll second.
All favor?
Okay.
Aye.
Okay. And election of secretary of the budget committee.
I think, does Ricky take over now?
What?
Does Ricky take over now?
I think Ryan can finish it. So historically, you can select somebody, but Kate takes the notes. So we've done this before with, if you want Kate to just take notes, you guys can pick somebody to be secretary, but Kate's still taking notes. So.
Okay. So we could, what if Melissa wants to go? Okay. Hey, just have Kate do it. Wants to.
Do we still have to elect secretary though?
Okay.
You can still pick somebody, I believe, yes. Pick somebody and Kate's still taking the notes, so. Adoption is something, that's all good.
And
No, Kate's gonna do the work.
I'll second him.
Okay. All in favor? Aye.
All right,
And then presentation of the proposed budget.
So what, if it's okay, with Ricky, we just go around and introduction since it's been a year since we've seen most of us, so. I'll start. Eric Smythe, Fire Chief, River Fire and Rescue. Thank you guys for coming tonight.
Let's do it.
Richard Fletcher, Secretary Treasurer.
Dustin T, Union President.
Austin Greenberg on board.
Ryan Welby, Board President.
Eric Itola, CPA.
all right, board member.
Kate Leonard, secretary. Jill of all trades.
There you go. Hey, guys, I'm Ricky Linares. I am the chair of the budget committee.
Okay, Mr. Chair, if you're okay, I would like just to do a quick update for the budget committee before we start going through the presentation with Eric. First of all, I want to thank all of you guys for taking the time to actually be a budget committee member and be a board member. Make it funny, all right, just making sure.
It's bad, isn't it? It's just hitting.
So I appreciate this. It's obviously it's a non-paid position. You guys are volunteering your time to come here and ensure that basically at the end of the day that our budget's balanced and that we are spending our money, tax money appropriately. So again, I thank you guys. we've come a long way in the last 2 years. So for the educational component, fire departments historically, at least here in this county, run a budget from July 1 to June 30th. So our new budget, which you guys are starting looking at, will start July 1 and will end in June 30 of 26. The lean times of fire departments is from July 1 to November 1 until our tax rolls come in. There are other places I've worked, taxes come in throughout the year, but in Oregon, it's a one shot. So we have to survive on our ability and whatever funds we have in our account between July 1 and November 1st. With that being said, in 2023, we got to November 1 with $103,000 in our account. So it means we made our last payroll and we had if something happened, we had $100,000 left in our account. In October 31st of 24, we have 1.2 million. And as you see tonight, our goal was to continue to increase that amount because we need to have the funds available should something catastrophic happen. And also make sure we can fund our department without having to borrow funds, which is TANs or some other type of financing, because that costs money. There's interest rates involved and there's tax, there's payments and those things you immediately take out of your budget. So tonight, what we're presenting to you is a balanced budget. We believe that is in the spirit of the organization, provides our folks with the best equipment we can that we can afford. I want to point out that for Columbia Fire Rescue, most fire departments, the bulk of our revenue is spent on personal services, which is our employees and the equipment to run day-to-day operations. We have a very small amount of funds that we allow, which we call discretionary, which means we can spend to either buy a piece of equipment, buy tools, buy other things other than the daily operation stuff. So that's what we're going to show you guys tonight. This is my first budget, so please be gentle with me. This is something that Eric has worked with us. It was been a bit of a change for us. You guys saw Krista last year. Krista had some family changes and was unable to continue. She recommended Eric, and so did our audit firm. And so Eric has been with us since March or February. February. And so a lot of this was getting done in a very short amount of time. I would prefer to do this again earlier and earlier, make sure you guys have ample time to look at it. So again, I appreciate it that everyone's here tonight and we can start the budget presentation.
Thank you.
Yep. Did you just do the message from the chief? Did you want to hit anything in there specifically?
I guess for the message of the chief, I would just, and again, it's relatively short. I'm trying to keep everyone's attention span. I didn't want to make it too long. At the end of the day, the only reason why our department is still functioning the way it is and that we're actually moving forward in a positive motion is in collaboration of not only the staff and the board, but the union and our volunteers. This is an effort for all of us to right the ship, and you guys have helped right the ship. We are moving forward. We have funds. We did not have to borrow money this year. We actually had more carryover allowed us to get through. So it's through that collaboration, diligence, and unfortunately there was some sacrifice. And would I love to have more firefighters? I absolutely would. Would I love to have better equipment? I do. And I think there's ways to get there. But we have to make sure we're on stable against ground first. So that's the gist of the message. That was the Reader's Digest version. When you got time, you guys can read it later. But that's this is not my plan. This was our plan, and it's come to fruition. And it's a lot of hard work to get us here.
Okay, well, yeah, I was contacted by Columbia River maybe in January about doing the budget. So talked to Krista and Angela, who worked for Krista doing the day-to-day. Looked at the previous audits and the budget and thought maybe it wouldn't be too bad and wanted to help out. So jumped in here. I guess the first thing is like working with Eric and Kate has been great. They really jumped into the budget documents, the personnel documents, and we've been having a lot of collaboration. So that's great. I didn't see anything alarming or even anything that I was really questioning when I started the budget process. So I didn't see any red flags. I'll just start there. But one of the things I did notice from the beginning was that the property tax collection is a little bit lower than I would have expected. The county is supposed to provide like really accurate numbers for how much property tax revenues there's going to be. And I've never seen it not be really accurate, but in this case, it's not exactly accurate, right? There's a little bit less property tax revenue coming in this year than the county said that they were going to turn over. So because of that, I have reduced the amount of property tax revenue that's in this budget by a little bit, just to hedge our bets. Hoping that it'll be more accurate, but just in case it's not, right? So I'm looking at the property tax page there. You can see that in the upper kind of general fund permanent rate thing here, the estimated collections, and this is from the county, says that they're expecting to turn over 9.1 million. But if you flip to the next page and look at the summary of resources, the property taxes are at 9.1 million. So while that is slightly over the 9,103,000 on the previous page, this also includes previous year's tax revenue that comes in. So like if you own a house and don't pay your property taxes, when the house gets sold, they take all the property taxes you owe from all prior years and then turn it over. So that's why this number is a little bit over the 9,103. It's including all the prior year taxes.
They get kind of gives you a report of that.
It does, yeah. When you get the property tax turnover, it'll tell you here are the current taxes, and then it just goes down like year by year, how much you're getting. It can be up to 15, 20 years worth of stuff. There might only be like $1.03 back from 98 that gets turned over, but it's all detailed in the tax turnover report. So looking at the summary page, this is just a summary of all of the resources and all of the requirements for all the funds that are in Columbia River. So, you know, the proposed for this year is 14.2 million. Last year it was 14.4. The actuals from 24 was 14.3. So really in line with the previous 2 years. There's no major changes. A reserve fund balance of 2.3 million is good. Let's talk about the reserve ending fund balance of 2.3 million. The chief talked about this earlier, where when July 1st starts, July 1st to when the property tax revenue comes in November, that's what the fire and rescue is working off of, is this 2.3 million. So this isn't extra money. This is like the money required to run for the first few months of the year before the property tax revenue starts coming in. Just to explain that. Let's see, moving on to the next sheet, page 11. This is just showing all of the resources by fund. Before we get into that, let's look at the sheet a little bit more. You see the sick leave fund, the apparatus fund, the health insurance reserve, and the maintenance enterprise fund. They don't have any dollars in it this year, and they don't have any dollars the previous 2 years. We have to show these funds in here because there are dollars in the 2023 actual column. So when next year, those funds are going to drop out of this budget, just to explain why they're even here, since there's zeros in for this year. So the resources, basically, we have the general fund is taking up it is the one that has most of the resources. There's $13.8 million basically in resources in the general fund. And then the grant fund has 15,000 of potential grants coming in. And then the capital fund has that beginning fund balance and a transfer from the general fund in it. So that's the summary of all of the resources. The property tax obviously being the biggest resource when you're looking at $13.8 million in resources, and property tax is 9 million. It's obviously the biggest resource. And Columbia River has no say over how much property tax comes into them, right? It's out of their control. So the biggest resource being one that you're not in control of, just point that out. Then going to page 13 is the requirements by all the funds. So this is by category, which are personnel services, materials services, capital outlay, debt service, transfers, this contingency amount, and then the reserve ending fund balance. So If we just look at the general fund, you can see the major expense is personnel services. That's like everyone's salary and every benefit and all the taxes that go into personnel. M&S are like the operating things you need for running the business. Debt services, obviously paying debt. The transfer to the other funds, this 35,000 is a transfer over to the capital fund. And then we have the contingency amount. Sometimes this isn't clear what contingency is for, but the way I build these budgets is contingency dollars are dollars you would use if something unexpected happened, right? This isn't like a rainy day fund or set aside for any specific thing. It's like if something tragic happens, one of the pieces of equipment gets totaled, right? And you got to buy a new one or something like that. This is like just in case money. And if it doesn't get spent, it just rolls on to the next year. So usually that doesn't get spent unless something catastrophic happens during the year. Yes.
And for the board, if you guys recall, we had the drunk that hit our ambulance. That would be next week. We could not buy the ambulance until we waited for our insurance, but this would allow us to go purchase an ambulance, then we get refunded from SDAL. So that's what Eric's referring to.
Yes. So, yeah, again, this reserve ending fund balance of 2.3 million. I hesitate to say this, but I'm gonna say it. You can kind of think of that as gonna be 2.8 million rolling into the next year if that $500,000 contingency doesn't get touched. And then, let's see, you just go to the grant fund. On the next page has $15,000. That's just $15,000 of anticipated grant money that, oh wait, this is the requirements. Okay, so if the $15,000 of grant money comes in, this is where it would be spent, would just be in M&S for the grant fund. And I'm sorry, but I don't really know what you guys spend the money out of the grant fund for. I would,
So we requested a grant for replacing radios, and then that would be our cost would be that amount. That was what would we have to cover. I believe it's 10%. It's $150,000 for the radio. So
Gotcha.
15,000 for that would be on us to come up with.
gotcha, okay. The last fund that has any requirements is the capital fund, and we have capital outlay of 450,000. And then just the leftover from what they're asking for versus what they're starting with is $8,800. So they purchase what they are requesting at the prices that they were quoted, they'll end up with $8,800 left in this
Can you
fund.
go into detail what is capital outlay?
So capital outlay is anything that you guys would have to approve. So
Like buying an engine.
we want to buy an ambulance. So that's part of this money is we're buying an ambulance. The shop needs a lift and we're buying equipment to outfit the medic that's in this bay over here. So what we have is we have 7 ambulances. One of them does not have all the gear on it. So what happens when they go down for maintenance or if they've got to go get it or they need to go get it, it doesn't have all the stuff. So we put in the budget to buy, and those things are expensive. A Lucas device is $18,000, a monitor is $50,000. They're over that $10,000 threshold. It falls under capital. You guys would approve it. But that's what that adds up to is those things we're purchasing. That's again, that when I told you guys about our discretionary versus non-discretionary, everything else is non-discretionary. This is our money that we have that we can purchase a few things.
Thank you.
All right, so we can go to the next one, which is their requirements by fund. This one's probably not so relevant right now because we really did just talk about this. Because a lot of these funds are dropping out programs. Really, the only programs that are here are the general fund.
Are we taking like this apparatus fund that's getting rolled into the capital fund?
So what Eric was telling you is there was no money in last year. There's no money in this year. So to have that go away, we would just have to allocate of whatever that remaining, whatever we have that cash carry forward or that unappropriated fund balance. We can say, hey, we're going to set aside $500,000 for an engine.
Yeah,
so we
Oh,
can't.
we're putting that money over in the capital fund
Correct.
instead of showing it over here in apparatus.
Yes, there won't be an apparatus fund for that. We're trying to simplify the budget and get it down to.
So you have to go a certain amount of years before you can drop that off.
Yeah, once this column over here has zeros in it,
Yep.
then we can drop these out.
And consolidating funds just helps to simplify that.
Yes.
Okay.
Why would you set up different funds? If you had like surplus money and you're like, well, I want to keep this money for our sick leave and retirement fund and this 400,000 for the apparatus. All of a sudden, you're starting to allocate all this money to very specific things. And then you can't use it for anything but the very specific thing.
It ties it up. Yeah, that
Yes.
makes sense.
So if you want to be resilient, you kind of like got to drop these funds and record what you're intending to spend your money on just in documents, right? It doesn't
Sure.
need to be in a fund in the budget.
Okay.
Yeah.
I believe it was after we changed our sickly, yes, way, correct, and that's fine. Well,
And that's where capital gives a little more flexibility with that as opposed to these specific categories.
Yes, exactly, exactly. Also, you know, the ending fund balance number, it would be ideal for this to grow each year a little bit, right? And it's not that it's extra money, but you could like internally in the meeting say, hey, we want to set aside $1 million for, I don't know, super deluxe ambulance, whatever, to purchase in 5 years. And then that kind of intent would be in the budget document and Kate would be tracking it outside of this budget document, right? And be able to bring in the detail in the meetings. So if you're seeing if everyone decides to increase the ending fund balance, you can record the reasons why in this meeting and then track it outside of the budget document.
And build towards that goal.
Yeah.
Long term, more than just a year, especially if it takes a couple.
Yeah, exactly.
Okay.
So going on to the first pie chart, the general fund is just showing all of the resources and how much of the pie chart they take up. Charges for services, beginning fund balance are identical, and the property taxes obviously being like 2/3 of all of the resources coming in. And then we can move on to the next one, which is the general fund expenditures by category. Which is just showing that personnel services, so 78% of all of the expenditures. And M&S is 16%, and you know, debt service being 2%, which is pretty small and nice. Does anyone have any questions so far?
Can I ask you a quick question? There,
Yeah.
in the last couple of audit reports and working with the IAFF financial analysis, they talked about our last budgets. They called it the budget that wasn't a nationally accepted standard. If you recall from the last couple of audit reports, did we transition into the different type of budgeting that is, if that makes any sense?
It does, yeah. So Eric and Kate brought this up. I haven't got to do the research. What I understand is right now, everything's on a cash basis.
Yeah.
Which is still an acceptable basis for doing accounting. It's just not the normal one, right?
Okay.
It's like maybe 1% of people do that.
Okay.
The other basis is accrual basis. And I thought before talking to them this week that somebody years and years ago did cash basis for some reason, right? But I learned that the auditors just switched it a couple of years ago, and I haven't got to look at the audit report or talk to the auditors to ask them why they switched it.
Yeah.
It's still a legitimate thing. It's just not normal,
Okay.
right? What's the difference between cash and accrual? Let's, for example, say you guys, or the payroll would be on a month basis, right? From June 1st to June 30th. So at the end of the year, June 30th, right? If you're on cash basis, you would have to cut those checks on June 30th to get that payroll recorded in that year. Accrual basis would say, we know that you're paying the June payroll on July 10th. So you can just go ahead and record the July 10th payroll back in the correct year. Cash is really like where you're spending the cash. And accrual is like being aware that at the beginning and end of the year, there's some overlap and you account for all of that. So
I asked the same question because I don't understand, and I didn't understand why. So he's looking into it. I did it, and that's why I said, so the auditors are also going to speak to, we have an audit on the 22nd. They're going to speak to it as well. I don't understand.
Yeah.
And that's why I was asking Eric too, like, if you can at least explain it's going to be asked. Yeah, but okay. Same thing. I don't understand either.
That's something that they brought up, the unions, the audit people brought up that our last couple of budgets were difficult to differentiate where the money was based on the cash style of accounting. So we were just wondering if that was a change or
right.
that.
Yeah, I'm sorry, I don't know why they made the change.
Okay.
I could hypothesize that maybe the books were so discombobulated for some reason, they just had to use a cash basis because they couldn't figure out the accruals very accurately.
Okay.
Right?
And have we moved to an accrual base, I guess is the question. Are we doing accrual base this time or are we still staying cash?
I don't have any say over that. I
Okay, I
mean,
got it.
personally, I would like to do accrual, but the auditors have a reason why they went to cash, and auditors would never go to cash unless there was a reason,
Okay.
right? So I want to know what the reason is.
Okay.
But if it could switch back to accrual, I mean, that's really the best way in accounting, I think, is to do accrual, because you're accounting for stuff at the end. In the beginning, you're like, this is really the activity of this year.
That makes it more clear, something that we don't really have.
Whose decision is that and when should that decision be made?
Well, I think it's the entity's decision, but if the auditors changed it 2 years ago, 3 years ago, I don't know what their reason was, but they had to have a good one,
Yeah.
because it's not nice to go from one to the other. As an auditor, that's a nightmare.
So say that we find out there was a reason, it's been resolved, we can go back to a
Yeah,
accrual.
yeah.
Is it the board that makes that decision? Is it Eric? Is it who makes that decision? And then what's the timing? When would we want to do that?
I probably wouldn't switch over until the end of a year, right? Like if you guys talk to the auditors and they're like, yeah, you can go back to accrual. And Eric and Kate want to go back to accrual, then probably like make a plan to go to the accrual in the next budget.
Okay.
So the 2027 budget.
Yeah, and so one of the things I find interesting, again, from my time here, is I remember back when we had our first finance director when I got hired, was we had to close everything out by like May 15th. Like she wouldn't let us spend any more money after May 15th because we didn't want to go into the next budget year. So would that be kind of a cash system versus an accrual?
Yes.
So clearly this department's done it several times. I don't know why, but I really do think our books were screwed up, and I think cash is actually a simpler form to do it and make it easier to correct. And now that they've been corrected and we're losing some of these line items, it'd probably be something easy to switch back to as well.
Mhm.
And we'll work with Eric on that. I don't have an issue with one way or the other, which one we do it. I just have to learn if there's something different. I don't think there's gross differences, but if there is, then I just have to adjust.
So when the
When we shut off in May, that was for cash carryover. You always want us to do any of our big expenditures
Correct.
before May. And then that was, so she guaranteed her cash carryover.
Correct.
That makes sense.
We had to save money for the
Well,
July.
But she also told me, Rick, that it was for, she did, if you ordered a part and you ordered it May 1st and it didn't show up till July 1st, it's because the invoice was after it was in the new budget year. That's what she told me. I have no idea what.
So she let us buy some stuff that wouldn't show up until later, if she hadn't know about it.
Correct. So,
If we had something ordered that was we ordered it this year, but we found out it's not coming in until July 20th. As long as she knew about it, it was okay.
So the audit, when we get the report from the auditor, we can ask this exactly.
Well, that was my question. We didn't have audits 2 years ago. We just caught up audits.
Yeah.
Recently, because we didn't have the last 3 years of audits. So like, if it was changed, I'm guessing that the company that just did our audits did it. And yeah, the books, I think, were messed up the last few years.
and
I'm just guessing.
Kate already emailed the auditors, besides Eric, the auditors are also going to speak to this as well. So they can maybe do some more explaining for us on the 22nd.
Yeah. And
No, that's what it's
Good
for.
question.
Yeah.
And technically, accounting wise, it's not any harder to do accrual than it is cash. Now, in my opinion, it's more accurate because you're really capturing all the activity of the whole year, even if some bleeds over and some blood over from the previous year, you get rid of that stuff and make sure you're just looking at the 12 months that you were operating.
Because I asked Eric, I said, I feel like we do kind of a hybrid. So we have $5 million in our account. That is what paying salaries and paying for electricity and all the things. And we know we're going to accrue tax dollars and ambulance revenue, all those things are coming. So it's kind of, that's how I saw it, was where we're kind of doing a little bit of both. I can't pay Dustin for next July if I don't have enough money in October, right? So we have to know we're getting money throughout the year. So no, 100% gonna ask. I really don't care one way or the other. I would like it, whatever's the simplest form and gives us the most realistic and accurate numbers.
Yeah, for activity though, that definitely makes more sense with the accrual. That way you're not worried about like wonkiness with billing or anything like that. It's there. That's what you did, and we spent it here, whether we were billed here or not, it was spent here, right?
Right. And it matches this document.
Right,
Because
right.
this document is July 1 to June 30. So you can track your expenditures in the same way than your apples to apples.
Right, and it doesn't it keeps us more in line with everybody else too.
Yeah.
We don't want to be the odd duck out. That
Right.
seems weird. Just throwing it out there.
Thank you.
So, hey,
Ira, did you have a
Christopher?
question? I saw your hand up.
Yeah. Can you guys hear me?
Ira,
Yes, can you hear me? I'm
we
here.
can't hear you.
You have a headset.
Those up. You hear me now? Shoot. Hey, Luck, can you
He
hear
had
me?
his hand raised on this app, but I don't
Yeah.
know if his
Can you hear me now?
microphone is working.
You can hear us though.
Yeah, I'm here.
Or if you can hear us, make sure you unmute. If not, we call him, right? Put him on the phone. You'd have to turn off the speaker on the other end. We'll get feedback.
Pause.
I was texting him right now.
Do not stand with your fellow
Oh,
Canadians.
there he is.
Hey, Ira.
Hey, yeah, I have my mic off and, on. It's unmuted. I just don't know why I can't talk.
Okay,
Not
well,
get
you're on
through to you.
speaker, you're on speaker, and we all can hear you.
Okay, great. So just my questions are with regards to capital overlay and contingency. Are these used basically the same way? I see that we didn't have a contingency in 23 or 24 and we started in 25. And could you give me a little bit of historical information on why we started it?
Yeah, so let's see. You want to tell me what page you're looking at?
Yes, I am on page 16. I'm
Okay.
sorry, page 13. I'm on page 13.
Okay, so the way contingency works and the way this budget works is for 2026, this is what we're proposing, right? We want to put the $500,000 in there just in case. If we go back to the other side of the page where it says 2025 adopted, last year they did the same thing. They put 500,000 in just in case. And then 23 and 24 are actual numbers. This is what actually happened in those years. And the zero there means they didn't use any of their contingency. So there may have been contingency that was in the adopted budget, but none of it was used.
Okay, yeah, I see. So, yeah, that answers my question. I was just-
Okay.
Okay. And that's all I was really looking at. That kind of seems strange. So thank you.
Well, Ira, stay on the phone so we still hear you.
Yeah, I will. I'll just,
So just to clarify, so that would mean in the 2025 adopted budget, that 500,000 was used.
No,
That-
in this, what we're looking at here, it's just what was budgeted.
Yeah, the top rankers is adopted.
Right.
This is actually spent, this is what was adopted last year, this is proposed.
So we don't have any information yet.
Well, the year's not done yet, so we don't have the actual for this
Okay,
year.
we're just waiting.
Yeah.
So we don't expect that,
Don't jinx us.
Oh, yeah.
Well-
please.
I'm just saying, this means we're not expecting it to end up to go to the reserve at that point.
I see what you're saying, because you said earlier.
It's not
you said
bumping
earlier-
up.
Yeah, you said in the 26
Right.
budget, it possibly would roll into that two
Yes.
point three for next year. But we didn't do that this year.
It's not, it doesn't calculate.
Yeah.
That's correct. It doesn't.
Okay.
and then,
That's just part of doing the budget, right?
And that's
Okay.
because we're not touching it. We're treating it as a separate fund, basically, right? It's hey, not rainy day, obviously, we don't want to use that, but.
Yeah.
So is the
unforeseen
intent for the
circumstances.
adopted 2025, is the intent of that $500,000 to transfer to the proposed? The same amount of funds just gets to put over as of July 1st, it just goes over here?
No, it's gonna get added to this number. This contingency would get added to the unappropriated, and then it would actually be this number. So we have to guess at what this number is, and being conservative, I'm just gonna use that number.
Okay, so we're not accounting for that one up here.
That's correct.
Okay.
If this doesn't get spent, in reality, it's
That
gonna
will
go
up
over there.
Okay, makes sense.
Yep.
that make sense, to everybody?
Yeah. Cool.
Hey,
Thank
I
you.
had one other question here.
Go ahead,
Can you hear
Aaron.
me?
Yes.
On page 11, and this is just something every time I look at a budget, when I see things that say, and it's under general fund and it's miscellaneous revenue. In 2023, we're at 130,000 and it drops off significantly in 2025 and we're back to 30,000 in 2026 proposed. Do you have any clarification on what miscellaneous revenue is? Is that just some old
That's things
taxes that are
like the
coming back or
races,
something like
fire
that?
protection agreements, kind of.
So a couple things, Ira. So we protect, Oregon has a law that every square foot of Oregon has to be covered by an ambulance. So our fire district is a certain size, but our ambulance district is actually bigger than that. There are people that live outside the fire district that can contract with us and they can pay their taxes. They pay the tax rate for their home and we would provide that fire protection. That's part of the miscellaneous revenue. We also charge for the races. So the races over here at the fairgrounds, we make several $1,000s a year, probably closer to 10, with covering the races. So we pay our volunteers. They're actually paying the volunteers to go stand by, but we receive money for the ambulance being on standby. And so we do make some money. And then there's a lot of odds and stuff that we do around. So that's why that number is decreased. I don't believe, honestly, from the previous budgets, and I don't know if Eric can speak to us, I don't think it's realistic, the numbers we had before. We weren't generating that kind of revenue.
Where does conflict money come in at?
So we haven't been on a conflict in
I
4 years.
know, yeah, but if in the budget, where would it go? Because it's not, we have to either budget for it or we have to make an amended budget later to.
We'd have to do it amended.
So it's not calculated in here already?
No,
It's
sir.
potential.
No.
That,
And all these are staffing rates. We haven't been able to say anybody.
the conflag revenue falls under other intergovernmental revenue, so, that's Ira, is that Ira that's on?
It's ours on, yes.
Hey,
Yes.
Ira, if,
Yes.
turn to page, 21, everyone can turn to page 21, and we'll look at some more revenue detail for the general fund. Skip down towards the bottom of the stuff there and you'll see a miscellaneous revenue for 30,700. And it kind of walks through what all of the expected revenues would be that would make up that 30,700.
And page 21, is that what you said?
Yeah,
The lower
Okay.
third.
Yep, I found it. Okay.
and so, that 133, there was an insurance refund of 75,000. And there was 37,000 of still called miscellaneous revenue, which, you put all kinds of weird stuff in there.
Yeah, that helps. That helps clarify. Thank you.
Yeah.
Yeah, that really breaks it down right there.
So did something change with the insurance refund that we're not getting so much now?
So if I recall, I believe the ambulance that we got totaled in the car accident, it was several $100,000. And so it came in spurts. We didn't get it all at once. That's the only insurance claim that we've actually had that I'm aware of.
So Eric,
Yes,
you're saying that high number from 2023 might be connected to that ambulance
We did.
accident refunds?
yes.
Because my question was like if there's any way to raise that again, can we start that? But it doesn't sound like there is.
No, it was an ambulance was totaled, and when it was totaled, all the equipment. And an ambulance with its full equipment is probably about $500,000 to $600,000 when you look at the monitors and the gurneys and all the things
Okay.
that are on there.
All right.
So it's a chunk of change. Our insurance paid us for the ambulance and then piecemealed out, like we bought a new monitor, we bought a new gurney. And so that's, if I recall correct, that was near the end of it. And that would have been where we were receiving those final payments to buy the equipment for the ambulance.
Okay. Thank you. Thank you.
That tracks.
Yeah.
So yeah, this sheet's basically just showing kind of some more detail for those categories, the property tax, the charges for services, which are the ambulance, the GEMT, fire med revenues, the interest income, what goes into the miscellaneous revenues, and any kind of transfers that would be. Does anyone have any questions about this stuff?
Does discuss the transfers. I know we had, historically, there have been some citywide transfer amounts and we're at 35,000 for this proposed budget.
Right.
Is there a detail for that? I
Um,
might be skipping the whole thing.
We did do a transfer thing, but I don't think it made it into the budget document. But basically that was just to. We had done this whole budget with no transfers, and then we moved some capital equipment from the general fund over to that capital fund, and we needed to transfer 35,000 from the general fund over to capital so that it would balance.
So previous years, there were some bigger ticket items that were transferred.
Yeah,
Those two
Yes.
figures. So,
We're not anticipating everything else we're purchasing, is that part of the capital, so. Yeah, fire engines definitely cost a lot more, that's almost not even both.
what these were?
Yeah.
Okay. Thank you.
yeah, I just don't know the detail to answer the 23 and 24 stuff,
Yeah.
like what happened before. I don't know what those were. Yes.
Historical versus now.
Well, it's a good trend that it's only 35 being transferred
Yeah.
from the general to the capital.
Right.
Any other questions here? Okay, let's flip over to the personnel services. Let's just quickly look at this page, personnel services.
Page 22.
Yeah, and then the next page, which is materials and services, that bleeds over to the next page. I made a change in this budget. Last year, they had like departments listed in the budget. And I've got rid of all of the departments, because you would have to add up all the personnel services for each department to get to the personnel services line. I felt it was more transparent or clear to like combine all the departments into just personnel services, right? And M&S, and not try to break it out by department. So I just made the change anyway. I just wanted to say that because it's different than what you guys saw last year. So this personnel services, if you guys want to just flip back to the page 22, this is details of all the stuff that goes into everyone that's working and paid for at Columbia River. Salaries, deferred compensations, longevity pays, unemployment, taxes, all the benefits. So I don't know if you have any questions about it.
Yeah, hey, Christopher, I got a couple questions. It's, forgive me for these questions if they're kind of monotonous, new to it. But, so mechanics on call, 14,000 on that. Is that, I see it's pretty standard. 2023, we're at 5, then we're at 15. Can Eric or anybody kind of answer to
So
what exactly that is for?
Each mechanic rotates 1 week on, 1 week off coverage, and they
Okay.
receive a standby. They're just on call, so there's an on-call stipend for them to
Yep.
be standing by.
Okay,
And it varies from week to week.
okay, thanks, Eric. And then maybe Chief, you could answer this one too. The volunteer reimbursement, it's 0. And I see we had 1 year where it was just $971, but you know, it's typically been over 5,000, but,
So previously IRA, we had grants that they had, and in those grants, there was a volunteer reimbursement component of it. So volunteers could put in for gas, they can put in for workout, they can put in for different things. We don't have that anymore. So we don't, that would have to come out of our general fund. So previous years, we had grants that funded that, and so that's why there was an amount in there.
okay. I wonder if it's worth a discussion later on, not during this one, but maybe later on to try and get something like that back. If you thought it was helpful, or if it's just something that wasn't used that much.
It's there, but it's in the general fund.
No, it's not there anymore. It was literally in the grant. So what happens, most of our volunteers didn't really care if they got reimbursed. We don't have to beg them, like, please turn in your fuel receipts, please turn this stuff in. Most are like, well, that's what I'm doing, is I just like doing it. So not that we can't look into probably having that in the future, just it was not very well used. Even in the grants, most of them didn't turn in receipts for us to reimburse them.
Okay. Yeah. So the last one, if you look at the workers' comp, what's the jump here for this projected year? What
Kate, you wanna
happened
handle
there?
that one?
They didn't have accurate figures in previous budget years. And so these are accurate figures. I'm not sure why they didn't have the correct number for last year's adopted budget. They were
Okay.
off by significant figures. So this year we have that adjusted and corrected.
Well, good. All right. All right, thank you.
An accurate budget's a happy budget.
Mhm. Okay, if there's no more questions on personnel, we can move over to M&S on the next 2 pages. This is just detailing all the M&S for all the general fund. I mean, have we gotten questions? Previous year's total was 1.5 million and then a little bit more than 1.5 million. And this year we have in there a little over 1.7 million. So not a tremendous increase.
And again, it's probably just juggling numbers and stuff, but on EMS supplies, you see in 2024, 112,000, and then nothing, and then 9,000 this year, or 9,500. It's about 2/3 down the line right here,
Yes.
EMS supplies.
So I think I can answer this one, Ira. So previous administrations and our finance director had multiple line items for similar things. EMS supply, then you look down further and it says EMS supply and pharmaceuticals. And so what happened was we had multiple of these, and it was problematic for us even in this budget to actually accurately pull the money into the right account. So we have people that were applying ambulance charging parts or supplies out of an account that was zero. And so we're trying to clean this up and reduce this down. So as we talked about in capital's anything over $10,000. The amount of money that we shifted over for the ambulance, the outfit, the ambulance, there was a couple things that Chief Frostberger still needs to buy. It's $9,500. It's less than capital. That's what that particular EMS supply, $9,500, is just some additional stuff to outfit that ambulance. So that will most likely go away, because if you look down further, Ira, if you look at line item 00206050, that is our medical supply and pharmaceuticals. That is everything that we operate our ambulances on a yearly basis.
Yeah, that was going to be the second part of that question. So thanks, and appreciate the clarification there.
No problem.
Well, a lot of this is really just categorizing things correctly and simplifying from what it sounds like from, streamlining it to personnel services instead of across every single subsection of the greater department then, right?
Yes.
Okay.
Yeah. And same with M&S, like trying to get the categories nailed down, right? Clean them up,
Right.
get rid of duplicates, triplets, whatever. And then working with Kate, so she's like really clear, like she helped put the budget together. She's gonna know where to code the expenditures, right? So that
Right.
the expenditures get coded to the line that we budgeted on.
Are you guys using QuickBooks now, or is it still a different kind of a system? It's kind of similar to QuickBooks, but we're not.
It's called Financial Edge.
It's like a Viewpoint.
I haven't used Viewpoint before.
It's a company, Blackbaud, and then in financials is a subcategory of Blackbaud.
We use Viewpoint here.
Are you planning on some large vehicle maintenance repairs? Because that took a great big jump.
It looks to me like we're gonna do it in-house more, because we lowered the outside work was at 160 and now it's at 20.
So to answer Rick's question, the line item 00206001, our apparatus are getting older. Our ambulances are getting older. We have 2 new fire engines, and we have a couple new ambulances, but the rest of our fleet is quite aged. And so it is the cost of finding parts, it went up. So we wanted to make sure we covered that. We hope we don't have to spend $130,000 in parts, but it is getting, our stuff is breaking. When it does, it's taking great effort and it's costing more because of the age of the equipment. I mean, I have 2 ambulances that are almost over 20 years old, and I shouldn't even have them on the line, but we don't have the money to buy another ambulance. So we're using those as backup or reserve. And when they do go down, the parts are getting, they're expensive. So that's all, Rick, is we just bumped it up because of the age of our.
Well, I know we don't have an actual in 2025 yet, because we're still in the year.
Correct.
but it just looked like a large jump over 24 and what we adopted for 25.
And if you look, so one of the options I had was the previous budget was not done by myself or Kate. And there was some lumping of money. So we had fuel costs for $180,000. We had never spent $180,000.
Yeah.
And so we breaking this down and trying to eliminate some unnecessary line items, but also getting actual numbers and being as accurate as possible. We should not ever be over on any one line item. That's our goal.
Yeah, just to chime in on that, with the maintenance on older things, you could predict, hey, this is going to cost 20,000, and by the time you're done, it's cost 60,000. So maintenance on older things just seems to have a domino or cascading effect. So
it does. Just one part
Yeah.
leads to another part and another part.
Right.
So yes, it's never
Right.
just as simple as.
I'm familiar with it.
Yeah. So vehicle maintenance outside is contractual stuff. So the ODF contractor, that's Sheriff's Department, a couple other small entities, and that's the stuff. So that money is set aside so they can purchase the parts. It's passed on to the company that we're actually fixing the vehicle for, but we still have to have funds in there so they can buy the parts to fix it.
Right, but it was really inflated.
Yeah.
And for the current budget one.
Yeah, last year was 160.
Well, and if you look, so last year was, and then you have 6,000 said vehicle maintenance, and your vehicle maintenance part. So in the process of trying to consolidate and actually get accurate numbers, and as Rick pointed out, well, by the end of June, we'll know where we finished the year on parts and stuff.
Does it feel like we're on track to hit our adopted budget since we're pretty close to the end of this fiscal year?
There are several line items we're gonna be over. So the one that, when Ira asked about the workers' comp, I think it was, which one was 278,000. That one alone was under budgeted in the previous budget, so we are over by, over your Kate, 78,000. So
Yeah.
we have the funds to pay it, but the line item itself is far extended because it wasn't properly allocated, correct?
Sure.
So that's why we took what we learned from this year, and clearly it wasn't ours, and made those adjustments so we have accurate numbers, so we should not be overdrawn in anything.
Okay.
Just to back up on that, like he just said, there were numerous lines that were overspent, but there's far more that were underspent. So in the whole scheme of things, the work we did to like project how much was gonna get spent at the end of the year is less than what was budgeted.
Okay. And that's why the fund grew to 2.3,
Yes.
basically.
So when we get our
Of the
audit, we'll
deficit.
see where we're.
Yes, you will see it, yes. Not the one on the 22nd, but the one we do this November, or where we do it?
September.
September, sorry. September, yes.
So with the overall revenue being missed, and by missed, I mean like it's different on the projection. I'm trying to find the page that was on. It's what you started out with, Chris.
I mean, Eric.
Eric, I'm sorry, Eric. Yeah, the estimated
problem.
general fund.
There's none of the projection work that I've done with Eric and Kate, is in this budget document. We just did that to verify that none of the funds are like overspent and we don't have to do a supplemental budget, and to kind of get a sense of, the beginning fund balance that we wrote in here is accurate, right?
Okay.
And,
Okay.
or conservative, less than we really think that it's gonna be, which
Okay.
if you guys see the financial package that I'm sure Kate will present in July after this year ends, like all the detail for what actually happened will be in there.
Okay.
Yeah.
Yeah. All right. Thank you.
So if we want to flip to page 24, this is kind of wrapping up the general fund. If you guys have any questions about any of the M&S stuff on here. I'm just going to point out that the capital outlays doesn't have dollars in here anymore because capital outlay has its own fund, which is at the end of this packet.
I'm just glad to see the legal service, see the downside.
No. Yes, they went down, yeah. That's what I'll leave it at that.
Learning from previous years, guys. That's good.
Yeah, and we just have the debt payments in here, the of 190,000. The transfer out of 35 to the capital fund, the contingency amount of 500 that we talked about, and then the unappropriated ending fund balance of 2.3 million there. I will just say something about the reserve for future expenditures amount. Say the budget committee or whatever says they want to set aside money for a specific purpose, right? You guys could put those dollars in the reserve for future expenditure amount. If you wanted to save money over like 3 or 5 years to like hit a target, you could use that line item to say, hey, we've got this money, but it's reserved for this thing that we want to purchase in the future.
That's
So-
my recommendation, get to it, yes.
That's what that line's for. Unappropriated means you can spend it on whatever you need to in the general fund for operations. The reserve is just a way to like say, hey, we.
It's like a savings
earmarked
account.
it. Yes. So I just wanted to point that out. You can go flip through the rest of the package kind of quickly. Sick leave has nothing happening this year or last year. Apparatus fund doesn't have anything happening this year or last year. RSVP, same thing. Health insurance fund, same thing. And then the grant fund, we just have that 15,000 in and out. This was for the radios, the grant, right? So we kind of talked about that. The main maintenance enterprise fund is another no activity this year or last year. And then just ending on the capital fund here. So we'll have a beginning fund balance. This year of 420. Because the 490 wasn't spent. Is not anticipated to all be spent this year. So what hasn't been spent is rolling over to the 420 at the beginning of this year. Some interest income in there, and then $35,000 transferred from the general fund. And there's 450,000 here set aside for specific purchases.
We will be buying an ambulance, obviously, this month or at the June meeting, we'll be purchasing that, but we had set aside 400. So we say they're 395,000 plus interest, and we didn't use all the ambulances costing like 295, 294. So there'll be some funds left. That's what he's referring to, roll it over.
And then the page after this is just a little bit more detail about what the capital outlay things are for. There's some building and improvements, equipment, and then apparatus. And then does anyone have any questions? And then the last page is the personnel summary, which just goes through and details the FTE that's being requested for each one of the positions. So 44 at the bottom, we're looking for 25-26 is 44.5 versus last year it was 42.5. So adding 2 FTE over last year, which is still 10 FTE less than 24's actual. All I have. Happy to answer questions.
The
Hey,
public edu- oh,
go ahead.
sorry. I was just gonna ask about the public education. That looks like it has some historical trends there. Is that rolled into something different? For this budget?
Where are you looking for?
Page 23. The bottom, the last line of them.
Oh,
No, that would be our pub ed stuff, our compliance. So I don't recall if we rolled it in, but that's the beauty of this meeting is we can add that to, obviously, we can add that as one small thing if we want to add that back in there. What I'm trying to do is we're instituting fee schedule for some of the things we're doing, like, well, maybe going out and doing driveways and doing some fire marshal duties. And that was going to use some of those funds to put back into our public education, where we can buy the little things for the kids and the coloring books and stuff like that. We just were, as I've stated, in our board meetings, but not for you guys, but in our board meetings, we're out of the woods. We're financially out. Clearly, we're doing much better than we have in the past. I just didn't want to overspend or have it. I don't want nickel and dime us, but there are funds in several other accounts I could use to buy still some pub ed stuff or fire prevention we can opt over.
And this one here where there's breathing apparatus, we don't expect. Like,
We're not purchasing any
Okay.
breathing apparatus.
and volunteer recruit retention is.
We don't have any funds for that. No.
That was always a grant.
so did you say you wanted to put some money in the public education line?
For us to purchase some stuff for like fire prevention, historically, it looks like it's around 5,000 what we keep in there. If there's a way to shift that for the final budget, yes.
Yeah, we can do that.
I still don't mind, I didn't see it, so.
Okay.
Go ahead, Ira.
All right, thank you. So I don't want this question to come across wrong. I appreciate all the work that's put into this and the work previous years put into this. My question is what, a lot of the questions I had were answered with, well, in the past this happened and we didn't catch it. And that is a common problem, right? I experience that every day. So I just want to put that out there. It's not, and nobody makes these mistakes on purpose. And my whole question is, are we doing anything differently now, or can we put some type of thing in just to, not be in a same problem with projecting money?
Well, we did 3 audits
Correct.
this last year, so with those
Gotta
audits.
do it.
we did.
Yeah.
And luckily each audit's improved each time. So the goal is to have a great audit every time. Historically, this organization has been behind 2 years, 3 years, and some of the expenses you saw in the previous years on some of the line items were we had to pay for audits, and they're not cheap, and so to have them do it. We're now down to, you look where it says the audit, I think, with 25,000 or 30,000, whatever it said in there. Now we're doing the audit. We're now caught up. So every year it's one audit. We'll budget for it, have an audit company come in and complete those tasks. So are we doing something different? Yeah, we're not spending as much money, Ira, and we've reduced our overhead, which was grossly inflated, as you could see from the previous year, 10 employees. That is a chunk of money that would have put us well outside of our revenue. And so by reducing both at the admin and unfortunately through attrition at the line level, it allowed us to get back under budget and get to where we need to be, which is not over budget.
Okay. Yeah, thanks, Chief.
Sir.
I even feel that the reformatting of this really simplifies it with categorizing where our funds are going to, instead of making it so convoluted and easy to mess something up. So then it messes up the next year. And how do you fix it?
Yeah, no, we're good. So kind of piggyback on Ira's question, just for clarity. Next year, when you do the budget, you'll look at this last year's audit and you'll be like, okay, so now we're really getting down to the nitty gritty.
Yeah, I mean,
Like, continue to get better is all I'm saying.
right, the way this is gonna go forward is like every month I'm gonna be reviewing the financial stuff, right? And working with Eric and Kate. And I'll start getting familiar with all this stuff just like they are, but I'm pulling them in because I couldn't do this without their knowledge, right? So,
The historical
were-
knowledge, right?
yeah. Or even just like, what do you need this year? Like, I don't know. I don't know how much they need for IT services. They do, right? So
Right.
they've been completely working with me on this budget, which I don't think they
No.
haven't had that opportunity before, right? So they've put in a bunch of work on this. They're gonna be looking at the financials every month. They're gonna know like what's supposed to be in vehicle maintenance parts outside work, right? They know exactly, they put the number here, they're gonna be watching the financials. So 3 of us at least are watching all the actuals versus the budget. And they can tie the reports they get every month to this, right? And so they're able to monitor on a ongoing basis.
So, so then essentially, well, Kate and you and Eric will see, hey, where are we at on, 00-20-6889.
Yes.
Even though there's nothing there, but that was part of that.
Yeah, thank you. That-
This is much easier to read, and this is a little more in line with what I've seen in budget, not all of the other really narrow scope that has been.
Well, I like the fact that there's actually, we call them cost codes, but it's the same thing.
Yeah.
Like cost codes
Yeah,
attached to each line item. So that makes sense to me.
Yeah, it's a really good looking budget. I appreciate all the work in it. And I like what you're saying with regards to moving forward in this year. It's good. Thank you.
Yeah, and I think having the audit be a lot closer to when we're actually, spending the money and then self-auditing every month to make sure that it's tracking for the whole year. That's smart. I don't know if we were doing that before. It clearly sounds like there was opportunity there before, so it's good that we're moving in the right direction, it sounds like.
Yeah, absolutely.
Well, at this point, Mr. Chair, you guys are happy with the budget, you guys can make a motion to approve it from the committee. It would, the board would then, would vote for it next month, correct? To adopt it. If you guys want to move it out of committee for the board to adopt it the next reading, which will be in June, you guys can do so.
Is there any public comment in the budget?
No, nobody signed up or emailed or anything.
And you ask again in June too. We'll say it's already public comment at that point.
Do we need to wait to approve it until we make the adjustment for public education fund? Because you got to move some stuff.
No, we don't need to. So long as you guys say, if you approve the 5,000 in public education, I will just, add the 5,000 there and remove it from the unappropriated ending fund balance.
On the 2.3, right?
Yes.
That makes sense.
So it's been a year since we did this. What is the motion to impose the tax levy?
So you guys, as the committee, you guys have to, so our 297, our permanent tax rate. Every year, the committee has to vote to basically continue that rate, even though it's a permanent tax rate. According to the ORS, that's why guys printed you guys chapter 8. It talks about it there. It just has to be done by the committee, every year.
I think we should make higher.
It's not, yeah, Dawson knows, it's not a, oh.
I mean, I don't want it.
Yeah.
Yeah, you want to pay more taxes?
It's a bad joke.
Too soon.
Okay.
So then at that point, then, folks, if there's, any more questions on this, are we, set to put it to a vote? Any more questions, anything else we had,
I think you do the
Tax levy first.
Post and do the post the tax levy first.
Let's just make a motion to.
What's the
Sorry.
the motion to approve the tax levy?
A second.
Yeah, I think you have to state it's 297 per thousand. You have to identify that.
So you have that, yeah, it's right here. So it's $2.9731 per dollars per thousand of assessed value.
This
Page
looks like-
8. Yeah. Page 8. Wait a minute.
Page 8, so page 8, gotcha.
It's like line down under the general fund.
Is that correct? I'm sorry.
You're correct.
Yep. I'll second that. Discussion.
okay, ayes?
Aye.
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 I think that approves it, folks.
Yeah, and the
Any nays?
Now you can do it. Now you would like to budget out of committee to the board.
Well, no nays, right?
No nays.
Some motion.
So that's nothing else. Thank you, Dawson. Thanks.
Okay, and then, motion to, move this proposed budget to the board.
Did we want to add the wording about the extra $5,000 into another fund on this motion?
Yeah.
Yeah, why don't you add that, to the motion?
Sure, so, completing the motion with the $5,000 going to public education, pulling from the reserve, unappropriated funds, reserve. Within motion, vote on, or.
Second the
just
motion.
need a second, sorry. Thank you.
Ira second.
Yeah, that was
Okay.
me. Ira seconded it.
Okay, and ayes?
Aye.
Yeah. Fine.
Aye.
Any nays on that one? Okay. It's here for public education?
Thank you guys, we appreciate it.
Yeah.
Thank you, chief.
Okay, then,
Thank you, Ira.
moving it over to the board then at that point, no public comment. Anything on additional committee decision or discussion? I think we went over everything pretty well, right? With self, yeah, feels pretty good about it. Tax levy. With us approving the budget, that shoots it over to the board at that point, right?
Correct, and then at the June meeting, the board will open the meeting. It'll open it to public comment, if there's any public comment, they can comment at that point, and you guys can vote to approve the budget. Better than June 28th.
Then it goes back to you, Ben, at that point, right, Ryan?
Yeah, then.
Close the row.
Well, it's the 7/10/1910, and then I call the meeting of the proposed.
You want to take a short recess, so if the budget committee members don't want to stay for the board meeting.
Yeah.
We're having to stay for the board meeting.
Yeah, I call this one adjourned, and then we'll give 5 minutes. Go to the bathroom real fast, and then we'll start the board meeting.
You look like you're just